Hello and welcome back to our Brighter Minds YouTube channel. As we all know that we are into the last week of earning season of Q1 FY23. So in this video we will take a view of all those companies that have all those sectors that has declared good results and sectors that have missed their mark. So overall we will discuss about the earning of Nifty companies also, Nifty 50 companies also, and how the future looks like. So let's start with the Nifty companies. Nearly 75%, 70% companies has already declared result in Nifty 50 universe. So far their results have been not very much encouraging, particularly not much upgrades from there, although downgrades have been little moderate, but not many upgrades and surprises out there. So basically the whole earning of the Nifty 70% companies that have declared result is delivered, or you can say anchored by the banking results. Banking have shown particularly good results, largely due to their lower cost of provisioning. So basically their bottom line came good due to lower credit cost. So that has anchored the Nifty earnings. In past we have seen that the metal sector and oil and gas has contributed a lot to the Nifty earnings. So that has been quite moderate this quarter. Overall, if we see that the analyst universe, then nearly 1 to 2% earning downgrades started coming for Nifty FY23 earnings. So the analyst community believe that FY23 earnings will be around 858 or 860 mark, and for FY24 it would be around 980 rupees for Nifty. So in that sense, Nifty trades at current 17,500 level. Nifty is currently trading at around 20x forward 1 year forward earning. So that is quite a balanced level, because once the Nifty goes below the 20 mark, we have seen in the past that Nifty has delivered good results in the coming years. But once that stretches far beyond the 20x, so the forward returns from Nifty has been lower. This time currently it is trading at around 20x FY23 earnings after this Q1 results. If we take one by one sector look, that which sector has performed better or which has missed the mark. So basically banking has done better, and banking results has mostly good in terms of loan growth and in terms of asset quality. And obviously NBFC sector has also participated this time, although not much pressure from their side. The last quarter was particularly painful for NBFC sectors. And if we come to IT has been IT demand has been good, although there has been some clouds on IT demand due to recession fears in US, but so far that has not played out. So basically the management commentaries from most of the IT companies have not shown so much of jitter from demand perspective, but obviously there is pressure from supply side. Particularly attrition has continued to be higher in IT sector, and likely to be at the same level or slightly to moderate level of moderation could be seen in the coming quarters. But overall IT demand has been good, but margin pressure has been there. If we come to metal sector, metal has been a laggard this time. Metal's performance has been weaker from past quarters. So if we take oil and gas has also disappointed this time, particularly in Reliance results and all due to that. If we come to the auto sectors, auto obviously this quarter has been slightly weaker from auto, but obviously due to lower commodity prices and coolness in inflation of major raw materials of the auto sector, will likely yield good results in the coming quarters, and obviously there will be some margin relief from that front. And if we come to the consumer staples, sector. So consumer staples this quarter they have faced the problem and they have faced the pressure this in Q1 FY23, but obviously we all know that wheat prices and all in sugar and all were trading at higher levels, but in this Q2 FY23 we will see good results because most of the commodities price inputs, so whether it's palm oil or wheat wheat prices or sugar prices, that has been particularly cooled down. So they have not passed the price to their customer in this quarter. So likely to be that will likely to be passed to some extent in the next quarter. So FMCG results is likely to be good in the coming quarters. And obviously if you see the cement sector, that has been under pressure due to the energy prices, crude oil prices, and so that has been, and obviously that has beared the brunt the most. And so if we look ahead, so cement is likely to be beneficiary, and we all know that the monsoon season is also behind us. So particularly monsoon is a particularly lumpy period for cement producers. So in terms of demand, so that is likely to be get benefited in coming quarters. And we all know that at the end of the September quarter we will start getting into the festive season, so that will start getting factored out in September quarter results. So particularly Nifty earnings has been so far subdued in the past. If we take all overall sectors in summarized form, so auto is likely to be good in coming quarters, and particularly FMCG will also likely to be going good. Their results is likely to be going good, and consumer, particularly capital goods, engineering sector will also see some relief in terms of input cost pressure. So outlook there is also good. So in terms of overall earnings, so far Nifty earnings has been in the range of 12% YOY earning growth. But usually in the past we have seen that it varies between 12% to 20% range. So this time that has been on the lower side. So there is some minor downgrades in the Nifty earnings, but overall not very much surprising. Large cuts on the Nifty earnings. So overall the season has been the Q1 FY23 result season has been weaker, but obviously not that much that the street was expecting. But the coming quarters earnings is likely to be better than this quarter results. So overall this is from our side. So if you like this video, please click on the like button, and we hope that we will bring out more such type of videos in futures. So thank you.